Okay, excellent. We're all set to go then. Okay. All right. Well, so anyway, yeah, thanks for having us over here. And uh, it's kind of it's really nice to be invited here and to demo the software. The software is unique, and for funded traders, this could be really make a big difference, and to optimize your trading. So um, when you look at Bookmap and start to understand, what is you're looking at here, because it can look rather chaotic, and the reason for that is, well, I mean, there's a lot going on here. It's actually quite the opposite. What you are looking at here is quite simple and straightforward. There's just three elements on this Bookmap chart. There are other add-ons and indicators, etc., that I will go over, but I'm just going to simplify the chart here to begin with, and we'll go over these three elements here. Just before I jump into that, just a little bit of background. I guess you probably read on the introduction here. My name is Bruce, and I lead the trading education over here at Bookmap. We have a lot of different streamers and traders over in our corner in Discord and on YouTube. So the lead education here is the foundation. That's what we're providing, so that we can offer other traders the ability to then understand that foundation and use it to trade all sorts of different styles. Because what you're looking at here in Bookmap is works on all markets, and in fact, it's very simple data that will just show you how the markets work. It visualizes it very, very clearly, and that is good for any trading strategy. It doesn't matter. So I've been trading for about 15 years. Joined the Bookmap team about 8 years ago, a little over 8 years. We first started off with a very rudimentary version of Bookmap, and it has grown into something quite powerful. So let's start off with this chart. What are we looking at here? Okay, so very, very simply, the chart up here, we can look at show the some of the elements or hide them. We're going to hide the volume dots, which are the transactions, the heat map, and we're even going to hide just best bid and offer here. Like I said, there's only three elements on that chart, and we're going to show a candlestick chart instead. Everyone knows this view. Okay, what is a candlestick chart? This is a 1 minute candlestick chart. We can look at a 5 minute candlestick chart. Doesn't really matter. And we're looking at the S&P E-mini. I do have open the NASDAQ E-mini, Apple, Tesla, and Bitcoin. So let me know what you guys would like to look at. But we're going to start with this 5 minute candlestick chart in the S&P E-mini. What you're looking at here, very simply, is bar data within a period. This period happens to be time. It's 5 minutes. Every 5 minutes, you're getting only 4 data points: open, high, low, and close. And then that period closes and ends, and you cannot access what is within that period, right? So these are not offering very much transparency. In fact, this is why when you read candlestick patterns, what you're really reading here is the order flow, or you're trying to understand the elements that are basically on the Bookmap chart. You're looking for the transactions, and you're looking for the depth of market. Where are they lining up to bid and offer? We do not see that here. There is no transparency like that. We do have volume in the subchart here, and in this case, it's not really helping much at all. And we have no idea where they're bidding and offering in this market. Okay, we do have a dome over here, our current order book. This is showing you liquidity. If we zoom in here, These are contracts here on the offer. These are limit sell orders and they're limit buy orders down below. We have a few different volume columns in here that we may maybe go over later. But this is what we want to cover here is just the order book here. All right. And then the historical chart. All right. So now let's just break down this candlestick chart immediately. Okay. Now it could be a 1 minute chart and that'll break it down further. But we'll just stick with the 5 minutes. And then we're going to break it down by showing streaming price action. This is the pure price action. Okay, there's no bar data here. It just gives you every single move in price. And that might seem like it's a lot or too much. It is not. These little details in order flow or transactions in here in the order book make a huge difference. This is what makes up the market. And we can go over this again and again and again. Here's a beautiful double top up here. And this is a continuation pattern down here. Okay, well, we had the CPI data earlier today, and then this it sold off the rest of the day until 11 o'clock or 11:30 here East Coast time, and we saw it move right back into the middle of the range here. All right, so it's just been a one big move to the upside, one big move to the downside, and then right back into the middle here. All right, so let's just look at this continuation pattern down here. Okay, well, what is it? Well, this is the speed of the move here that we see. And look at this consolidation period here. Well, first off, it reversed down here. We see the move up, consolidation, continuation. It grinded higher, and then it just went sideways here. And then we still get continuation to the upside here. All right, so we'll just look at this area in here because this isn't really the easiest to look at, to be honest. It's a little more complex because of all the back and forth in here. However, I mean, look at all the wicks, right? There's buying pressure, there's selling pressure on all of the wicks here. Now here, we can see the breakout, okay? And it sustained a bit, okay? It did trade back into the middle of the range. What it bounced off of here is going to be the point of control, and you can see it here in the volume columns. Okay, so it is this area right here at this kind of 41.45 in the S&P. Okay, so what we can see is the back and forth around this most traded level, and no clarity really. This is getting interesting now. Because up here, price did accept for a while. It did sell off and it bounced off of this most traded level and it rejected off of it and it went back up. Okay, so that's what we want to be able to understand and read. And these little areas in here, you do not see that in the candlestick chart here. Okay, this little cluster here, we can draw around it, a rectangle around it, and understand price action. Okay, this consolidation, this breakout, a retest here, and then it moved back up. In fact, we can even look at here, look where it came back and retested. Originally, it came back and retested and bounced off of the top of this little range in here. And it went back and forth, and then it kind of went down and tested the top of this original range down here. It finally came back down and tested and bounced off of the point of control. Now we're getting toward the end of the day here, or you can see that 2 o'clock in here, there's some volatility and back and forth in here. So we do have some, I think it was, what are we looking at in here? At 2 p.m. today was the FOMC meeting minutes. And clearly, this area held down here. Even with the volatility and the back and forth, you know that this is news, and it went back up and it tested up here, okay, top of the range, and it's right back down in the middle of the range now. All right, so I've been just covering the pure price action here. All right, we're going to go to the next step in the next layer of context, which is the volume dots. Okay, and we're going to look at the transactions on that best bid and offer. And this is where the rubber is going to meet the road here. We're going to start to understand that more buy volume at the highs here can lead to a breakout. And then even more back up here again will be the price continuation and move to the upside. Okay, so back in here, yeah, it's not so clear. And we can look at that in the wicks. We can look at that in the back and forth in here. There's sellers down here. There's buyers up here. It's kind of all over the place. But this is a distinction here. Okay, so I mean, this is like a false breakout here. A move back in. This, it did break out. It sustained for a little bit, and then it broke back down into the middle, and then it came back up in here. And when you see this kind of retest in here, it is more likely we see the move to the upside, especially with the big volume trading here on that buy side. All right, now that's good. That helps us. However, we are missing a piece in here, and a very important piece. And that will be the third element on the Bookmap chart. And that is, where are they buying and selling? Where are they bidding and offering? That's where we look at the heat map here. Okay. Now the heat map looks complex. It is not. It is very, very simple data. And we'll go to the current, we'll come back to this area here, but we'll go to the current market to show you the heat map here. Wow, there's a nice sell-off here. Yeah, let's take a look at where this sell-off might go. Okay, so I would say, like looking at the first area down here, to retest in here where it broke from. Okay, this is where the buyers came in and moved it higher. Okay, right in here. Okay, and looking for a retest back down into this area here. Okay, it may even come back down into this swing down here. So kind of a zone in here. All right, just because this is where the buyers came in. Are the buyers going to support it again? And that's what we need to determine, and we'll look at that in the dots and the order book in here. All right, so anyway, let's get back to the order book. Right, what is the order book showing us? Okay, well, we know the depth of market, the DOM, is just showing us here liquidity. Okay, limit sell orders above the market, limit buy orders down below. And then if we zoom in a little bit here, you'll see these numbers always changing in here. They're always adding and pulling liquidity. Okay, you can see the histogram here relates to the number. Okay, so here 188 here is this big red bar. 194 is this big green bar down here. Okay, when the numbers change, the bar will change as well. But what we do is we take this data here and we will make that into a heat map. Okay, so in this current market window right here, there's this vertical white line here. We got the candlesticks on it. Let me, there we go. So now you can see the vertical white line. This is the current market window. This is our current best bid and offer and last transaction. Look at the liquidity that just came in. What is the reaction to price? Okay, or do we find buyers or do we find sellers interested in trading into it? Well, we just found some sellers. Okay, now we're finding buyers, and I'd be looking for them to trade back to the other side here at 37. Okay, they traded into this liquidity, and we're finding buyers now back up here. Okay, so where are they most likely to go? Well, to the liquidity area here at 37. All right, so as long as we're getting buyers here, all right, so we're getting another retest down here. Okay, but you can see that we had buyers in here, and then they stopped buying and the sellers came back in. And let's see if they get another test into this liquidity here at 33 or so. Okay, and they're starting to pull that liquidity. Note that also the offer came down a bit lower here at 36. 35 and a half, 35 and 3/4. And note that they're not staying in the order book here. They're pulling that liquidity at the last second. Okay, so that gives us insight as well. Okay, so transaction did occur in here. So anyway, before I'm getting a little bit ahead of myself here, what we are looking at in the order book here is liquidity. We take the numerical values in here and make it into a heat map. So here, the orange or red color is high liquidity. The scale is up here in the top center of the chart. Red and orange is very high liquidity, then yellow is less, then white, blue, and then black is the least amount. And that's all the heat map is. So when these numbers change, the heat map reflects the change. The difference here is we record it and plot it on the chart. So this is how the order book unfolded here. Okay, we can see it. We can see that they came in, this liquidity, they pulled at the last second because look at the heat map. So these guys did not transact. They didn't really stay in the order book. Okay, this one, even this one down here pulled that liquidity away from the market at the last second there. Okay, now these guys did transact here. All right, so we have something now. These are limit buy orders. It's high liquidity. We can even see how many traded here, 245, okay, in the volume column here. All right, so that's just fact. Now we know that these guys stayed in the order book and they meant business. They transacted. That will give us insight here. Okay, so they're transacting here. Now do we find our buyers here and lift it right back up to our 33, and then maybe we can even get back up into this 35 area here. All right, so anyway, it is this context here. Look at the context between the buyers on the bid and the aggressive buyers with the market buy orders. That's what the volume dots are showing you here. So a green dot is a market buy order transacting on the best offer. A red dot is a market sell transacting on the best bid. And the size of the dot refers to how many transactions took place. And that's all it is. Okay, so we can hover over here and look at this big dot here, and we can see it's for a volume of 866. Okay, or we can hover over this green dot here, and it's for a volume of 233. All right, so it's a graphical representation though. So it's relative volume all the way through here. This gives us insight to who is in control. Okay, in fact, you can look at this little area in here and say that buyers are in control in this point onward. If we see sellers come at this bottom edge in here, they will break it and trade back down into 28. If we see buyers come back in here, likely they'll come back up into 34 or, top of the range here. Okay, maybe we can get our move into 35. They've got to trade through this guy here at 33, that liquidity there, or this guy needs to pull. And that is the auction that is happening currently. Okay, so here we go, trading into 33, and not enough buyers to trade through it. Okay, it just bounces off of it. This is what we call absorption here. Okay, they kind of pulled from the order book as well. Only 6 transacted there, and then we can see that that was it, and then the sellers come right back in. Okay, now we can also see in here, and this will give us some insight. High liquidity that came in here at 33. Okay, we noted it earlier. We thought that maybe there'd be enough buyers to break it and come up into 35. And that scenario did not unfold. Okay, what unfolded, we bounced off of this here and found some sellers yet again down at the bottom here. Looks like they are going to break it now and try to trade into 29 to 28 down in this area here. Let's see. There they go. Okay. Let's go down a little further. Let's hit 28. Let's go for lows here of the swing. There they go. All right, and then let's go read this. They stayed in the order book here. They're getting filled. Okay, traders are getting filled in here. Look at the big dots, the big transactions in here. Now, I'm covering Bookmap here on a low time frame. We're seeing some pretty good price action in here due to the FOMC, but the I'm going over this on a low time frame here so I can demo this for you. Okay, you can zoom out and you can look at this in a much bigger picture here, and it still works. Look at the liquidity down here at 4,100, and we can see that some of these other areas in here, there is no liquidity in here, very little on this move to the downside. Right, so we were first looking for a test into this area that unfolded and it went through it. Uh, and um, and then we're looking for maybe some profit taking down in this little area here. Uh, did we get we got a little bit in here, I think, of profit taking. That's about it though. And then just sellers continue to hit the bid here and take price lower. Okay, so let's take a look here. Next area, maybe this little area in here, I think we're already there at 27.5. Else we're talking lows of the day here. So around 22 or 20. Yeah, so bouncing around that 27.5 area here already. This is getting interesting. They're getting filled here, in here, in here as well. And we just haven't found enough aggressive buyers. Not yet. All right, so here they're still bidding here. And are we going to get our buyers here? Let's see. Yep. All right, let's see them try to lift this now up through the 31.75 and see if they can come up into the other areas of liquidity here. See how we're starting to find some buyers in here now? Now I'm looking for them to really take on these guys here and trade into and through these limit sell orders. They're bidding up again here. We're just not finding the buyers yet. Now they're pulling. See them pull? So all we need is aggressive buyers right now. There's not heavy liquidity here. Buyers now can sweep the order book higher and trade to the next level of liquidity, which would be up here. The gate is open here for these buyers. If we don't get them, right back down to 29.5. And we didn't get them. Anyway, what we're talking about here is just understanding the auction. We're looking at a very low time frame here. We can really zoom in and look at a micro structural time frame. In fact, we can zoom in Bookmap to look at nanosecond resolution if you want to do that. You can see every single transaction in the order book here. These are well, we're not at nanosecond yet. We're at microseconds. We can zoom in all the way if you want. Yeah, now we're at nanoseconds, so billions of seconds. Okay? We record everything. And that is one of the distinctions between us and others out there. Very accurate. All right. Now, there's something more I want to show in here. Okay. This was really interesting move in here. Just not enough buyers in here. They're just not willing to buy and take this higher. Okay. So the sellers come in and we're back down to the low of the range. And let's see if we can get a few more in here and trade into the 25, 26 and 25 areas here. All right, so anyway, let's see, there was an image earlier today, and then I want to get into stops and icebergs in here. But there was an image earlier that a trader put in our chat. He's really become quite the expert at looking at reversals and what unfolds here. And we can go through this kind of anatomy here of a reversal as we're looking for the same thing right now when this might happen in a reversal. And I just don't see it. I just see more sellers and they're taking it lower. We're looking for these little areas where buyers might come in, and they're just not. So sellers continue to drive price lower. Now down here though, we can start to look at the auction again historically as it unfolded. They're staying in the order book in these areas. Look at these big transactions into a lot of buy liquidity or limit buy orders on the bid here, in here, and also down in here. Okay, now look at the sellers in here. Look at the size of these sellers in here. Okay, that's a lot of selling. Look at the buyers on the pullbacks in here. Not a whole lot. Okay, now they're also offering lower here. There's more sellers at a lower area in here. And we're just not finding enough buyers in here. Now, this is where it gets kind of interesting. The sellers, a little bit of cluster, some clusters here of selling. However, we're just not finding as many sellers as we were on the drive lower earlier. So we're not finding them anymore. Why is this? Well, one of the reasons might be they're all absorbed by limit buy orders on the bid. And we're just not finding interest for taking this lower. Once we start to break small structure and we start to find buyers trade into high liquidity here and through it, we have the potential for reversal. Okay, and we're looking for buyers to take control of the market at this point. Now they need to come back up and test above these areas right in here, where all this massive selling has firm control over the market. They need to test them and trade above them. You can look for, if you do see buying pressure come in, you can look for at least a move back up to this area to test it and potentially trade through it. All right, so we have other things to look at in here as well. They start to bid up and chase maybe on the bid in some of these areas here, like in here, for example. And then if the reaction is we're finding more buyers, well, we're looking for it to go higher. All right, so anyway, when we break this down, you can look at this. Well, you can see a head and shoulders within a head and shoulders, in fact. All right, so the pattern doesn't matter. What matters is the context of the price structure with the transactions and the limit order book within it. Okay, and that's why these patterns repeat again and again. But the name of the pattern, whatever, that doesn't matter. It's understanding this context in here. We can go through a lot of what ifs. So for example, maybe price would have dropped really quickly into these areas down here, and maybe we just had really strong buying back up above this area. Then that would be like a V bottom, and we'd see price probably climb back up and to test these areas up in here. Okay, that didn't unfold. This was more kind of traditional, head and shoulders. So a move down again, a pullback here, kind of a pullback here, finding more buyers, and then they finally are able to get above the sellers right in here. See that area right in here, and look at the buying pick up in this area in here. Okay, and that's where the buyers took control of the market in this time frame here. All right, so that's what we want to understand, and we can look at shoulder, head, shoulder, or we can look at shoulder, head, shoulder on a bigger time frame here. Right, doesn't matter. Look again up above here where the buyers took control again on the bigger head and shoulder pattern. All right, so this is what we want to understand to see if buyers or sellers take control from the market and start to trend. All right, so anyway, all right, so did we trade into our 25? No, not yet. Okay, wow, a lot of orders on the bid in here. Okay, they transacted in here. Now this is getting really interesting now. Okay, so we can look at this here. We broke the small structure in here. Okay, or not actually, we did not break this one here. We just traded up to it. So we're still going back and forth a little bit. Okay, starting to break these small structures in here though. All right, so here's a selling just coming into the market here. Now I'd be looking for it. Let's just see if we can get this scenario here. in the order flow, can we get buyers back up above this 33 right here? If we do, then we have a potential for a reversal pattern here to unfold, trade up into 35, maybe up into 40, even 45 up here. Okay, so if we get the buyers here, okay, so don't see them quite yet. Let me know if you guys have any questions in here. Okay, so we're looking for this scenario, and this is actually the secondary scenario right now. We're trying to kind of pulling for the buyers in here. Most likely we won't get them up here, and we're going to get sellers again here, and they're going to take it right back down. And in fact, it's starting to unfold here. So again, looking for sellers at the bottom edge here, and then looking for them to take it down to this liquidity down here at 26. Okay? And it should happen pretty quickly too. Someone getting in the way there, looking to absorb some at 28. And let's see the sellers if they can trade through that guy. There they go. Traded into them. Haven't traded through them yet. All right, let's see if we can get our sellers again, and then the move down. There they go. Now, as you can see, what we're doing in here is we're reading this price structure, okay? The bottom edge here, and we read the sellers down here. We're pulling for them. We're pulling for the buyers in here. They just didn't show up. So we covered the really is what the first scenario is: sellers at the bottom edge and then the break. Secondary scenario was buyers at this little edge up here and then the break up above, or at least test some of these areas. So the important part here is when we start to see these scenarios unfold, now we have insight. Okay, well, we're looking for something particular, basically like a setup, but it's really the context of the traders, their transactions, and where they're providing liquidity. And then we can look for follow through in our scenario. Now, for trading, and when you start to look at your setups, and your setups can vary from volume profile. They can be candlestick patterns. They can be regular price patterns. Maybe you're looking at Fibonacci levels. Maybe you're looking at pivot points. It does not matter what you're trading, your style of trading. You want to know at your important areas what's happening with the transactions. That's what's important. Okay, and this will repeat again and again and again. So here's our move down into 25 liquidity down here. So how do you, well, to look at possible trading techniques around this, there's many ways to slice and dice it. Okay, if you're looking for the bottom edge in here in the breakdown, well, then you'd be looking for, once you see like the selling coming in here, this would be your entry down here, a potential entry. Now, we're not advocating or recommending one strategy. There's just so many different ways to trade. We're basically the tool, the object, like an artist tool. Let's say you're a woodworker. Chisels or saws or whatever it is that you're using. There are many different ways to use it. Okay, we're just the tool, and you are the artist, and what you make out of this here it's up to you. Maybe you're looking to sell it here. You miss it, but you're a pullback trader. You get the pullback. You get confirmation of the move here, and then you're just holding. Or maybe you're looking for more confirmation on selling at the bottom edge and then the breakdown. It's up to you. How to manage your stops, how to place your targets. Many different ways to do that as well. So let's just get rid of some of these for the moment. And I can outline a few ideas in here. Okay, so yeah, let's suppose that you're looking down here, right? So you're looking at this exact point for price to continue on down, just like it did here. Okay, what if it doesn't? Where do you place your stop? Well, we have an edge here. Okay, we know that there's sellers here. There's a lack of buyers. They could not get above this little area here that we talked about. If they can't get above, and we see sellers at this area in here or down here below, we're looking for them to take it lower. So you would be getting in here. Okay, maybe you're using a stop, sell stop, or maybe you just hit market. You would be looking to place your stop probably up in this area up here. And now you're looking for that follow through. Now, maybe you could be really aggressive. You could even put your stop in here. That would be very, very aggressive, and you'd be stopped out quite a bit. There's always little pullbacks to these areas and then continuations. Or maybe you're looking for placing your stop up here. You know, it depends on how you trade, your risk reward. What are you looking for? Another way to look at managing your trades, well, we even looked at this area here. We outlined it earlier. Okay, so the move back down into this area in here, and maybe you can front run. See the high liquidity here at 26. Is it 26? Yeah, you can front run that high liquidity, and then you can place your one of your targets here. So maybe you leg out, or maybe you're all out. Okay, so you would be from I don't know, around 130 down to 26 and a half or so, something like that. Maybe that's your trade. Maybe that's the time frame you're trading. It really depends. You know, you can look at a bigger picture in here, you know, maybe you're looking at the bigger picture up in here. And after this FOMC, you can see, this is just fascinating to me. Look at FOMC before 1400 here, or 2 p.m. East Coast time. Look at the liquidity in here. Look how it dried up. Why do we have volatile action in here? Because we have a lack of liquidity. Okay, traders are pulling their orders from the order book. A lot of them are, at least. They do not know what the news is, and they're going to not take the risk. And it's very plainly here in the chart. You can see it, and you can also see, like, after around 4:15, they came back in the market here. Right? You can see the liquidity when they start to come back in. So anyway, like maybe you're looking for the break of something like this on the higher time frame. Maybe you're in here at this bottom edge, and then you're looking for the clean break and the break lower. So maybe around 42, and then you're looking for lows of the day after something like that, maybe, or this first profit target here that we looked at. Okay, so that would be somewhere around 35. Or 32, somewhere around in here. All right, so anyway, and then maybe you're just holding the rest. Maybe you moved your stop down, okay, from that higher time frame. Maybe your stop is down above here around 35. Different ways to slice and dice it, different time frames to trade, different risk rewards. But what we're talking about here, no matter what, is these top and bottom edges of support and resistance, or supply and demand, and starting to understand the order flow around them. okay, the order book as well as the transactions. And that can work on all time frames, just like we're talking about. So here we go with some buying coming back in. Now, we know sellers are in control at 31 right here. Okay, so all we've gotten so far is a pullback to that area. We need to see buyers above it. If we do, then we're looking for probably the swing up here at 34 and maybe 35, our line that we drew earlier. Okay, so let's see if we get it here, right? So we look for buyers to take control above it. They're trying. I'm not too convinced by it. So yeah, I'm looking for more pieces in here in the order flow. It's not bad, but I'm looking for some pretty big green dots in here to try to pull this up. In fact, you can look at how that we got a retest here. Do we see any buying up here? None. Right now, they may come back up here and buy, but we're not seeing it right now. If we see sellers at the bottom edge here, we'd be looking on this small time frame for a move into 30. Okay, maybe they can even get down to this 29 level here. Okay, so just understanding this is what we call exhaustion. It's the lack of trading here. There's our move. Okay, it is the lack of aggressors here. It has nothing to do with the order book. It's all about the aggressors. There's no transactions up here on a retest. If there are no transactions up here on a retest and they're able to transact down below, okay, and they did here, you can see some of the here. We can make the dots a little bit bigger. Okay, we do see some transactions down here. We even have another retest up here, okay, to a little bit of buying here. And there's another point of exhaustion here. More sellers. We're looking for this liquidity to test. Okay. Now again, I know this is only like a 1.5 move or whatever it is in the S&P. It does not matter. This is a fractal move within the bigger picture. This happens all the time, okay, all day long. All right. So let's see here. I have been going for about 45 minutes, I think. I don't know how much time I have in here, and I know that it's actually been an hour since the event started. Are there any questions? At this point, we've covered a lot in here. I do see some questions. Okay, or no, we're just talking about they can hear me. All right. All right. Anyway, guys, I mean, this may look very foreign, but it really is how the market works. The market doesn't work by volume profile. The market doesn't work by patterns. It works by orders. And it doesn't work by candlestick patterns. It works by the orders within the candlestick patterns that gives insight to that candlestick pattern either failing or working out, right? And what Bookmap is showing you here is the orders. It's showing you limit buy and sell orders, and it is showing you the transactions on the pure price action here, all of it. Okay, best bid and offer streaming over time. Okay, look at the rejection here, down into this liquidity here at 28. Now, so you see how they're above, even on this small move here, see how they're above this 30 right now. Okay, we can talk about this here. This could be trapped volume here. So we'd be looking for a squeeze then to the upside into 32, right? This is a whole nother way of looking at, these markets here. Okay, so it's not unfolding here. In fact, it looks like these guys might get squeezed. Let's see, maybe it will. Okay, All right, if we get some transactions here at 30 3/4, I think we can get the move up into 32. There we go. There we go. Beautiful. All right. So again, it's just understanding these transactions taking place down here. And if we get back above them, we have the potential for this to unfold, right? The potential for it to unfold. No matter what we do in here, we have to take risk. That is a part of trading we cannot escape. All right. Now, one of the beauties that we've added over the years in Bookmap is different add-on indicators. And this one I think is rather special, the stops and icebergs. We can show you when iceberg orders are getting filled and transacting. And we can also show you when people are getting stopped out. So not only are we going to be looking at the order flow in here, we're actually going to be looking at the types of orders that are transacting. And that is rather amazing transparency. Here we can see that this blue line is stops. I'm sorry, icebergs. Okay, the red line here are stops. And we see a lot of iceberg transactions here on the sell side here. Okay, so did they get price to go their way? No, not whatsoever. Okay, so they were selling in here, and they're probably getting squeezed on the way up here. But who knows? Maybe icebergs. These are different players in here. These are larger players, and they can have price go against them for a while as they just average into their position. All right, so let me clear the charts in here. It's getting, after this demo in here, it's getting kind of cluttered. What I want to show though is the stops and icebergs. It's in the sub chart here. We have, okay, now this is getting interesting. See now this larger player in here. Here we know, let's just outline it here. We know there's sellers in here. We know there's more sellers here. Now they're getting it their way. All right, so let's see them take it down to here. Okay, see how that additional insight here of the larger players in here adding into their position here. Now we're looking to see if they can take control of this market fully and move it back down to lows. Okay, so low of the day would be down here around 21. Now we know that there's some larger player activity in here. Okay, so let's see, and look at this beautiful stop run here to the downside. Okay, a lot of stops in there. Let me get to yeah, I'm not sure how much time I have in here. If someone can tell me when's the cutoff here, that would be helpful. I mean, I can go into more detail on the stops and icebergs if you guys like, but that's up to you. I have a question here. Can you spot some way the absorptions that lead to false divergence in the cumulative volume delta? Yeah, sure, absolutely. So that's a really great question. I love it because you're exactly right. Understanding absorption. Here, let me just demo it here. Let me take stops and icebergs off here, and we'll look at cumulative volume delta. Okay. Why do you get divergence in your cumulative volume delta in the subchart here? This is a very, very simple, blunt indicator. It just takes buy volume aggressors, okay, market buy orders, gives it a positive number. And then it just adds that to a negative number of sellers over time and just plot it. That's it. So it's giving you pure volume reference here. However, look at this here. Look at cumulative volume delta drop like a rock here, right here. Now it's correct. Cumulative volume delta, there's massive transactions in here. So what does it do? Well, it takes all of this sell volume, negative numbers, plots it on the chart, and you get a negative move to the downside here. Price moved one tick here. Just one tick. Why? Because look at the context here. On the other side, it's absorption. It has to be, basically. We see limit buy orders in here. And they basically take the other side of the trade and stop the market from dropping. If they were not here, then price would have dropped as well. It would have swept the order book. It would have swept through these orders in here, and it would have gone lower. All right. So now we have a divergence in here. Okay. So we have sellers in here, and we made a lower low in CVD, but we made a higher low. We didn't make a higher low. Let me show divergence maybe somewhere else. Like it does work in here, in this little zone in here, but I'll show it in a more traditional way. Okay, so yeah, we did make a lower low in here, so it's kind of interesting actually. We made a lower low in here. See that? Did it make a lower low in price? Not really. It did by one tick only, but CVD continued to drop. Okay, so this is actually negative divergence in here. And I'm looking actually for it to drop and then see a lot of buyers in this area in here, and then you'll get this one drops a lot, and then you'll actually see it make a higher low in your CVD. It just indicates that within this area in here, there are more buyers than sellers. Okay, here it's actually indicating the opposite. There are more sellers at this low here, and it did drop here. Okay, but look what happened to them. They just got totally upended in here. Okay, so this is negative divergence. Okay, in essence, so here's our low. Okay, here at 25. It went down, okay, two more ticks, but this is a pretty nice drop here in cumulative volume delta. All right, so anyway, we know that they absorbed in here. We know they absorbed in here. Okay, and we see more selling in here. So we see lots of selling, CVD going down, but price not going down. What we talked about earlier, you start to note where the buyers come in. Do they start to break some of the structure? Okay, they broke a small structure here. Look at this small little area in here. Okay, sellers take control below that. And then buyers come here, and look at this. Even it retested. It came back and retested off of the top of that and continued on higher. Okay, now these would be trapped sellers in here, and there'll be buyers up above as they get squeezed to the upside here. So anyway, there's some divergence there. Good example of the opposite of what we're looking for. But we don't see a lot of buyers until we see them move it here and break above on big green dots like we talked about. All right, we'd be looking for that in here. Now, I also want to show the stops and icebergs, because not only is it the heat map in here and the absorption, a lot of times you will see absorption happen, or price fails to drop because not because there's liquidity in here. There might be none. But what happened? Why didn't it drop? Well, because there's an iceberg on the other side absorbing all of that. It is a hidden order from the order book. You don't see it in the heat map. Okay, we can show an example in here. Yeah, so this is actually pretty interesting. They actually front ran it here. I'm going to clear the drawings again. And we have a iceberg on chart as well, and I'll show you that. So we'll show exactly what happened. And let's see here. Trying to get to your questions. Make sure I'm not missing anything. Q&A and chat. That's what I want. All right. Okay, so yeah, here we go. And let me show the icebergs and show stop. We can show the stops too. This is just, it's beautiful stuff here. Here's an iceberg order, precisely what we were just talking about. Here, you can see this little blue line in here. It's an iceberg. Okay, they actually, here's the evolution of the entire iceberg order. It transacted right here for E, which means executed for 1,000 contracts. This is one player. He started transacting up here. He moved it down. He transacted in here, 477. It stayed in the order book here until price came down again and transacted here with 155, and then it ended up for 1,000, and it completed. His order completed. Okay, we also have this context of a stop run right after. And we can see it here in the subchart. So again, we're starting to understand that this is divergence as well. Okay, so why couldn't price really drop through here? Well, it did a bit, but there's someone else on the other side, okay, absorbing it. It is a hidden order, an iceberg, 4,000. It's pretty good size. Pretty decent size, let's put it that way. All right, so anyway, now who uses icebergs? And this, we're going to again talk about context in here. It is larger players. They don't want to show their liquidity in the order book because they're afraid they will not get filled. Here's one right now, currently in the book for 250. Okay, it's right here. See the blue line. Okay, let's see if he transacts fully here. We'll see what's behind this iceberg here. Okay, it's only, there we go, starting to transact. Look how he's front running this high liquidity as well by one tick. So he'll get filled before the high liquidity. Let's even see if he chases. He might even chase here if he doesn't get filled. Okay, so we just talked about who uses icebergs. We know larger players do. They don't want to show their liquidity in the order book. Who uses stops? Okay, mostly retail traders. They're using their stop order because they do not have a large account, get stopped out, take the risk off, and then get back in when you see another opportunity. A larger player can absorb all the way down here. They'll just put their limit orders in and get and absorb all the way down. They'll put it in here. They'll put it in here. They'll put it in down at 4,100, 4,110. All right. So anyway, we can also read the stops here. 542 stop run, 221, 588 on the move down. Okay, now that's interesting information here because if these are stops in here, a lot of them. Now there's a lot more transactions than just these. You know, I don't know, 12 or 1,300 or whatever it is in here. Okay, there's more than that. A lot more aggressive sellers in here as well. Okay, but there's a lot of stops. Okay, but we have to kind of figure, what does a stop mean? Okay, well, one scenario is, you know, here's another one, 488, and that iceberg just got filled for 1,148. There's actually two in there. That's what the two means here. Okay, so this is actually looking pretty good now at this point here. We're at lows of the day. Okay, we're at 3:15. We got another 45 minutes in here. And we're at lows of the day. I am really kind of curious if we're going to get a move back, you know, kind of mean reversion trade back into you know, some of the other transacted areas in here. I kind of doubt it. This is pretty strong move after FOMC, so it's trending. But I'm kind of curious, and I'm really eyeing this level here, right up here. because this is where these people got stopped out. And I'm curious to see if we can get back up to this area in here. So we know that there's lots of sellers in here as well. We can assume, though, on a stop run that they're exiting. They are not entering the market. If that is the case, then it's possible that there's no one left to sell. So if there's no one left to sell, then we'd be looking for buyers to trade back up into these areas in that mean reversion trade we just talked about. Okay, because this is at a discount and there's no more sellers willing to take it lower. Okay, so look again, we have that context, people getting stopped out, and iceberg in here absorbing. Here they go. Let's see, I'm looking for them now to move it right back up to here to 21. Let's see if they can do that. Nope, not yet. Okay, let's see if we can get a retest back up here at 19. I mean, just how much selling pressure is there? And clearly there's still more right now. Here's another iceberg. The C part means it canceled. So 550 of them transacted and then it canceled the order. Okay, so there's another one down here that's live in the market, 822 down here. All right, let's see. We got our buyers come streaming in. Let's get back up to 19. And I think we got enough, I think. Let's see if we can get a retest back up at 19, and they should be get up to 21. Yeah, it looks good. Let's see a little bit more buying in here, and then the move back up to 21. Okay, and just 21 right now. Who knows? We might get a lot of buying back up above 21. Okay, if we do, then we're looking for a bigger move up to 25. Okay, so anyway, we're reading the context in here. We're reading stops and icebergs in here. Any questions on the stops and icebergs? I don't know what how familiar you all are with Bookmap. Maybe have you guys seen it before? Just a little bit of insight. Have you been using it? Okay, so no feedback, so I don't know. All right, well, anyway, yeah, just I'll wrap it up here. So again, just looking at for any trading strategy that you're using, then it really doesn't matter. You're looking at very specific areas and you want to get into the details of what's happening in the market at that time. And Bookmap is excellent at showing that. Okay, so how do you know if a pattern is going to work out or not? Okay, let's suppose you're a volume profile trader, and you can look at you can go over it all day long. Here's your tapered edge down here. You see the big transactions at 25 and the drop, and not too many transactions down here. Okay, is it going to fill in? Maybe. Or are we going to get buyers come back in and trade it back up to 25 here? Just up to 25, right? Because this is kind of all low volume in here, and to try to trade back to here, we're getting our answer right now that sellers are there's still more selling pressure, right? That's why when we look for these moves initially on these snapbacks here, just up to here, that's it. And then we'll look for something further. If we get more buyers above 21, that's something different, and it gives us insight. Right, so anyway, hope that was helpful. These three elements on the chart to zoom in and really see what's going on in there. You can even see it zoomed out on the bigger picture. The same data is there. Okay, these markets are fractal, and you'll see the same thing again and again. Bigger time frame. I'm looking for the move to 4100 basically. So we got another 40 minutes or so, and that selling pressure mounts, and then we're looking for that move lower. Here's an interesting one. Okay, so here is our double bottom pattern in here. There's a little bit of selling down here, but talk about divergence. Here's your divergence again. Okay, look at this, equal low, selling here, but all because of this buying in here and this buying in here, we make an equal low here, and we see a higher low though in the CVD. What this means is that there's not as many sellers down here. We'd look for these buyers to take it back up here, okay, and retest the high. They've already done it. So let's go through the secondary scenario is look for more up here. And then we look for, 23, but really 25 would be the next stop for these buyers to take it, okay? Anyway, guys, if you're interested in Bookmap, you can go to bookmap.com. I do believe that there are some specials with Trading Pit. You can follow up with us at support@bookmap.com, or you can reach out to Stephanie there at Trading Pit and provide you with some of the details. Thank you, everybody. Thanks for coming, and thanks for the opportunity to introduce Bookmap to you guys. Okay. All right. Have a good day, and we'll catch up hopefully another time. Bye-bye.